Good evening and welcome to another edition of Capital Market Live on Channels Television, where the market speaks and we try to analyze and get a direction on what to expect. I'm Ladi Williams. First off, let's start off with global indexes. We see European shares close high on Friday as a rally in technology stocks led by German software maker SAP. That outweighed the drag from a surge in oil prices. Oil again topping $100 a barrel, and fresh U.S. tariff threats, even as investors worried, that the inflationary fallout could force central banks to keep interest rates higher for longer. So we see the FTSE 100 there closing 0.91% higher. The DAX in Germany 1.36% higher. We see the CAC 40 in France down 0.88%. That's for Friday's close. But for the week, all of them are up for the week so far. Then taking on to Asia now, Taiwan's TAIEX declined 2.67% to close at 43,654 points. Mainland China's CSI 300, that declined 1.67% to 4,069 points. The Hang Seng Index was down 1.38%. China's Shanghai Memory Technologies listed on Monday. That was expected to lift investor sentiment there, but we did get that downbeat close there for Asian markets. Technology listing, that was on Monday, for that stock. It did stoke fears amongst investors that its market debut could pull cash from Chinese equities. There you have it there. That's red on the screen for most of the Asian stocks that we track. Taking on to U.S. now. For U.S., the U.S. market, we did see the stocks were quite mixed on Friday as gains in telecoms, financials and healthcare sector, that led shares higher, while losses in technology, utilities and oil and gas sectors led shares lower. So we see the Dow Jones Industrial Average was up 0.46%. That was on Friday. S&P 500 about 5 basis point higher, and the tech-heavy Nasdaq down 0.64%. Before the trading week, these were mostly down. That's for the whole trading week, and definitely investors they were quite jittery this week. Seeing oil again topping $100 per barrel. But the interesting part is we did see oil and metals rise for the week together. Normally you see metals down for the week and oil up, had that inverse relationship, but it was different for this week. All right, let's bring it home now. We see Nigerian stock market extended its record-breaking rally this week with investors piling into heavyweight stocks and pushing the benchmark all-share index to another high there, 247,000. I guess we're trying to make it back to 260,000 for the all-share index. Equity cap closed 159.58 trillion naira. That's for the whole trading week. Let's look at the performance in other parts of this market now. We see for trading activity, 4.4 billion. That was what was traded this week in stocks, valued at 306.14 billion naira. Deals 255,589. We flip over to other parts there. We see for the sectors that we track, banking led the rally this week, up 8.35%. Consumer goods was a lagger there, down 3.76%. Industrial goods 5.01%. We did see Bois Cement make a comeback this week. Insurance 3.86%, following with its financial services partner there. That's banking. We see oil and gas 0.11% higher for the week. I guess tracking what we're seeing in the global oil market there, rising with it. All right, let's unpack most of the happenings from this week. Joining me now to see maybe we can get some clues on what to expect for these markets and the economy going forward. We have Dr. Patrick Ajumadia, Head of Research, Sterling Asset Management, is joining me via Zoom. Good to have you on the show. Good evening.
Good evening, Adi. Good to be with you as well.
Yeah, so definitely quite an interesting week this week. Global commodities market, let's kick off there. We did see oil up for the trading week. That's talking about WTI and Brent. They were up for this week. We also did see metals. Also up for this week, the likes of gold, silver, and palladium, and most of the metals that we track. What is that telling us at this point?
So I think I would need to begin by saying that initially when we saw oil price coming down during the peace agreement that Iran and US had, everybody thought that the issue was over until we now begin to see the oil prices coming up again. So I think what that is telling us basically is that as oil price begin to rise, there's a need for investors to begin to look towards near cash where they will hold their funds. And that's why we saw the price of gold going up. Now for precious metals and other metals that we saw again, there's also increased demand in terms of economic activities that is booming in some emerging economies. So that also has a role to play in some of the precious metals. So we see those mixed reaction. Investors are trying to look for where opportunities are and to take position. So that's what we saw.
All right, so see natural gas, that was up 0.72% for the trading week. WTI back to the $90 level, 10.61% for the trading week. Brent crude, that was at 92.62. Did top $100 at some point. They're up about 6.86% for the week. And definitely we know that's one that keeps most of the central bankers quite nervous at this point. It almost seems we cannot deal with inflation, seeing what's happening with energy prices.
Yeah, so that's the issue. And if you check what is happening, I think last month, June numbers, when we saw some of the countries, key economies that have brought out their inflation numbers, we saw their inflation numbers, moderating. And the reason why it moderated was because the signal was that if oil prices was going to come down, oil price was coming down, and so that was what happened. Now that we are seeing renewed increase in oil prices, by the time they begin to bring out their July inflation numbers, is going to tell on it, slightly. Maybe the rate of decline may not be as it used to be. If you check what happened in the U.S. economy, the inflation dropped from about 4.2 to about 3.5%, and we saw in other key economies as well, we saw that decline. And so with what is happening now, it's either two things might happen, depends on how oil price is hitting on the economy. We might not see the rate dropping as it is dropping now. So that's one concern. The second concern is about what central banks across the globe would then be looking at, because even though inflation is moderating, many of these central banks are beginning to look towards easy rate at some point because they feel that oil price is moderating. But now that we're seeing this renewed increase in oil prices, we might be seeing some staying long in terms of rate cutting, and that is going to be playing the direction towards the market and the economy will be moving at this point.
All right, let's get a check on the metals market now. For the trading week, we did see gold, $4,052 up 0.85%. For the trading week, the likes of silver also up about 4.06%. That was a bigger move up. For the metals that we tracked there, copper about $6.33, up 1.22%. Platinum and palladium, they're kind of like the laggards for this week, but they're mostly positive. But is this telling us, is safety? Investors running to safety at this point? Normally, we would think the US dollar would be the preferred safe zone. It's like they're running back to metals.
Yeah, so again, like I said earlier, at time like this, investors try to look for safe havens, where they can put their funds. If you check the US dollar too, it has also remained strong, during this period as well. Unfortunately, we don't have it here. But again, these are natural commodities that investors want to put their fund in times like this. But for those other precious metals like copper, platinum, and the other ones that we show, like I said, we are seeing some level of economic performance in some emerging economies. If you see, even though China is still slow in terms of its economic performance, if you look at what is happening to India, you see some level of increased economic activity. So again, there's the issue of EVs that is also booming at this point and all that. So these are playing, some kind of factors in what is driving other commodities, other precious metals apart from gold and the USD that we are seeing.
All right. So do you think this continues into next week? Already we're seeing there's still escalation in the Middle East at this point. What do you think is the right move, going into next week? Do you think it's a short oil, metals, or do you think long is a trade?
So it's unfortunate at this point that it's difficult to tell the narration, but what I think we'll continue to see basically in terms of the oil market, because it's the oil market that determines what again will be playing around the precious metals and and all the other commodities. The direction for the oil price is we are likely going to continue to see the volatility, even though we cannot tell the direction where it's going to go to, whether it's going to go up or down. Like it got to $100 per barrel sometimes towards the end of the week, and now it has come down to about $90 or $93 per barrel now. So we expect to see that volatility. The direction will be difficult to tell now, but we know that the volatility will be there, and this volatility will continue to shape what happened in the financial market, in the commodity market, and the precious metals market.
All right, definitely. Talking about central bankers, we did get a decision for the July meeting, and I guess it was, as expected, consensus. It was not a hold at this point. But let's listen to what the governor had to say.
In arriving at its decision, the committee noted the recent resurgence of hostilities in the Middle East, with particular attention to its spillover effects on global energy prices and the potential pass-through to domestic inflation. Notwithstanding the development, available evidence suggests that the Nigerian economy has remained largely resilient to the external shocks, reflecting the gains from prior reforms implemented by the fiscal and monetary authorities. However, maintaining the current monetary policy stance will provide an opportunity to closely monitor incoming data and assess the trajectory of inflation to guide future policy decisions.
All right, that was the central bank governor there from earlier this week, and it was a whole decision as expected. Dr. Jomedia, listening to all the governor had to say earlier in that meeting, would you say it was a hawkish tone or somewhat dovish?
I didn't get that part. Would I say it was a...
Would you say it was a do you think the governor had a hawkish tone, that's the MPC, or would you signal dovish?
Well, I think basically from what the CBN was saying, I think he's signaling that there's likely to be hawkish somehow, because although not necessarily, depending on what then comes out of it, not necessarily increasing the rate at this point, because we have seen that, like he mentioned, the economy has remained resilient in spite of what we are seeing. And he also mentioned the fact that there's a concern about what is happening in the global space, and that concern can trigger down into the Nigerian economy, and that's why he's mentioning that the CBN had to maintain the rate at this time. Maintaining the rates, might also, because of the positive relationship between the benchmark policy rates, that's the MPR, and other rates like the stop rates and the yield and all that, will mean that we might be seeing some level of changes depending on what is happening in the global market, because at this point it is very sensitive for the government to begin to think of what to do if they decide to cut rates. If they had cut rates the last time, and we now began to see what is happening in the global space, maybe we would have been seeing some level of significant capital flying out of the country. But because rate is high, that has also kept the stop rate and the yield high too, and that is also driving some level of capital inflow to the Nigerian economy. So I think at that point it was the best decision that they have taken. And I think what he's trying to say, yes, it might not be dovish, might be somewhere in the middle, depending on, like they have emphasized in many of their meetings, that it's going to be data driven. So the data would determine the direction, whether it's going to be more hawkish or whether it's going to be dovish, going ahead.
All right, definitely. We'll keep tracking and trying to figure out what's going to happen next. Now, but we're going to take a break. Now, still going to have Dr. Jimmy there. We'll take a quick break. When we come back, we unpack what to expect for the trading week and still piggyback on expectations for inflation. That's in a moment. Just stay with us. All right, welcome back. We're still unpacking what played out for this trading week when it comes to central banks and their decisions for this week, and also market sentiment. I still have with me Dr. Patrick Ejimede, head of research, Sterling Asset Management. Thank you for staying on. And definitely, we're still talking about the latest decision, but still, looking at decision from this week right here in Nigeria. We did hear the governor. He did talk positively, about the PMI reading. That's for the last one. We did come out from, contraction into expansion territory. That's over, 50 points. Inflation did ease. That's for June. Even though it's not as big as, some would like to, celebrate, at this time. So I guess everything is still working out for the MPC. They don't really have much worries.
No, of course, I think this is where the work is at this point. It's, because the macroeconomic environment tends to have improved, it might appear that they don't have much work. But I must tell you, this is where the most of the work now begins to play, because whatever is being done to keep capital to begin to flow into the economy, to keep exchange rates stable, is coming at a cost. Don't forget that rates are now also coming up. If you check what is happening to the 1-year TB, and if you check what is happening to the stock rate and the yield of the 1-year TB, you will see that it is high. And and so the question now is a big job for them, because as they are trying to drive growth, they are also trying to ensure that they also attract capital to keep the exchange rate stable. So it's a big issue for them at this point. So I think this is where the work lies, for them to be able to stabilize the exchange rate, moderate inflation, and at the same time drive growth, to that desired level that we are looking at. It's a big task at this point.
Right, but at the same time, we do know, manufacturers, organized private sector, they keep, complaining, about these rates, being high, being elevated for the longest time. They believe there should be some kind of, help, for the manufacturers. Because we're still trying to drive, production, but it seems at this rate, it's all about keeping inflation down and sacrificing growth.
Yeah. So I think what is important, and that's what I've said in many conversations that I've had, that what is important is about, being able to capture, to win the battle of inflation, and then keep exchange rate stable. I can tell you for free that these two macroeconomic variables are very much more important, to hold. Otherwise, what you would find is that if we are unable to capture inflation and we are able to keep exchange rate stable, what we will see is that we will naturally see a situation whereby growth will be dragged, because growth is a function of these two variables that I've mentioned. If you check periods where inflation is high and exchange rate is depreciating, what you will see is that growth will naturally then begin to drag. And so, because of the inverse relationship between these variables and growth, it is very important for you to drive growth, to be able to hold these variables, to keep them in such a way that they are not increasing, they are not depreciating, exchange rate is not depreciating, and inflation is also moderating. So that's a very central point for them at this point. I think once it is concerned, and that's why in various conversations, the major argument is about the continuity of the reforms. Once it is clear that these reforms are going to continue, for the Nigerian economy, then over time we begin to see capital naturally begin to flow into the economy, and then we begin to see the CBN thinking about cutting rate, because exchange rates will naturally be stable at that point. Inflation will then maybe be moderating, and then you can then see the type of growth that we are trying to see.
And definitely in the week where we had the interest rate decision, that's for this week, we did see Nigerian stock market rallying again at this point. And the banks, they did lead the charge this week. Do you think investors were reacting to positive outcomes from the MPC meeting, or they didn't really take that into consideration?
So whatever happens in the MPC meeting, yes, it's going to, ideally, naturally, what happens is that when rate is high, you see investors, beginning to move from the equities market to the capital to the fixed income space. But again, if you look at what is happening in the fixed income space, it's been doing very well. The equity market has been doing well irrespective of the high rate. And what is causing it? What is causing it is because of the improved macroeconomic conditions that we have seen over time, and then the continued belief that these reforms that we are enjoying at the moment is likely going to be stable. These factors continue to drive what we see in the equity market. So you keep seeing that in spite of the high rates in the fixed income space, we keep seeing the equities market, still performing. And then there is still some level of increased capital flow that is coming to the Nigerian economy. Don't forget, in recent time, we saw the S&P, putting Nigerian economy on the watch list for 2007. And we're also expecting the FTSE Russell rating that is likely going to come out around August, towards the end of this month or early September. So all of these factors are still in favor of the Nigerian economy, and that is also still driving capital to the equity market.
Looking at the trading wave, we did see the banking stocks. They did trigger, the rally, if you could call it that, at this point, especially when it comes to, first hold code that hit, a new high, cross a new milestone when it comes to market capitalization. Why do you think the banks are getting so much attention? Why they got so much attention this week?
Yeah, again, the high interest rate environment that we have seen has continued to favor the banking sector. Because the interest rate is high, so we keep seeing that in their favor. So, and that's why you see that kind of renewed interest in the banking sector. You see a lot of investors, because we know that interest rate is likely going to stay a little bit longer. I don't think it's a bit difficult for us to see interest rates coming low, for this year. And so that's one factor that we think is bringing that kind of renewed interest in the banking sector. And unfortunately, we then see First Holdco, who happens to be one of the banks that first released their earnings, for H1, and that also drove their performance. We see what happened in their performance in their earnings. Their gross earnings went up by about from 1.66 trillion to about 1.9 trillion, and we see their PAT going up by about 81% to over 500 billion naira. So these are sentiment, and that's why investors are beginning to look in that direction of the banking sector.
Most of the time, we do see the banks actually coming out with most of these stellar earnings, especially in the U.S. We did see that happen too, with some of the big banks actually reporting. I believe that was last week, and here we see the banks again are winning. Do you think at this point you just have to keep these banks in your portfolio, especially as an investor in Nigerian stocks?
Yeah, as long as the rates are high at this point, and some of them are taking advantage of the high rates, so it's necessary for you to begin to look in that direction to say, okay, because if you do a breakdown of the components of their income and you see where most of the income is coming from, then that will then give you a direction to say, okay, if they are making high income and the larger fraction is coming from the rates, the high interest rate continue to be in their favor, then it is one thing for you to begin to look in that direction to say, okay, let's have them in my portfolio, so that because the rate is going to be in their favor, they'll be declaring high profits, and then I can then take advantage of an investor from the high profit.
All right, so what is your crystal ball telling you going into another trading week next week?
Wow, it's going to be interesting. Interesting in the sense that there's this high expectation for corporate earnings that we are still expecting. Most companies have not brought out finished bringing out their H1 results, so we expect that to continue to drive the market. That expectation is there. And then the stability in the exchange rate, like we've always seen, we expect that to continue to drive, to play some level of role in the market. And oil prices too is there, so we can't tell the direction, but investors are taking position in the oil sector so that they can benefit from the oil price increase, suppose they continue to go high. Then the renewed the expectation that the reforms that we are embarking upon are likely going to be stable is also playing some role in trying to keep investors in the market. So the following week we expect those kind of volatility like we've always seen in the market, but overall we might see some level of positive direction. Don't forget that the market is coming from a correction in June where we saw huge amount of profit taking. So because of this corporate earnings that is being released now. So we might be seeing that kind of positive direction in the following week.
Yeah, it's looking like we might see a bullish performance for this month of July, but it's still early days though, or is it?
Yeah.
No, not that early.
Yeah,
I guess it's going to be positive. Technically, the month is rounding up.
Yeah, exactly. July is almost rounding up now.
Yeah, so I guess it's going to be a positive month at this point, and definitely we'll not start looking on, to the month of August. But at the end of the day, we'll see, how these earnings, keep rolling out. I did see a couple of them release their H1 earnings, likes of Bond Cement, also, and I'm guessing that's why it was positive, for this trading week. But we'll keep tracking all of that. Thank you so much, Dr. Patrick Ajumedia, Head of Research, Sterling Asset Management. Thank you for coming on the show this weekend.
Thank you, Ladi, for having me.
Fantastic. All right, that's the show today. Hopefully you have direction, going into the next trading week and, knowing which stocks you're going to have to play with at this point. But remember, the game is to buy low and sell high. Thank you for watching Capital Market Today. I'm Ladi Williams from the team right here at Charles HQ. Bye-bye.